Hey guys, welcome to another video here of Traders Academy. I know I hadn't made one in a while, and I wanted to make one today in regards a little bit to options trading. And basically, what I want to touch a little bit about is, I'm not going to dive into like all what everything means in an options contract, but more so how to pick up, how to choose an options contract when you're trading options, because there's so many, and how do you choose the right one? So that's what we're going to cover a little bit today. Currently looking at the SPY. I'm actually looking to see if I could take some put options on it again. As you can see, I mean, I sold my put options that I had from yesterday somewhere right in this area. I don't remember if it was right here or right here, but it was pretty close to the low of the day. And I wanted to take some call options, but missed my opportunity. It came up, and you see this is the initial morning high, which was also lines up with the previous close, and it pretty much rejected from that level. It's trying to break down below VWAP right now. We got a trade line VWAP cross about to happen on the 3-minute, and looking at the 15-minute, looks like we're about to get that as well. If we do, then I expect it to go test the low of the day again, and quite possibly we might break through that 200-day right there. So I'm looking at, maybe taking some more put options on this. But anyway, let's see how right now that the index is trading at 444.70, let's just say. So if we wanted to take some put options on this, how do we know which contract to select? Well, a couple of things, but one of the most important things you have to look at when you're going to take an options contract is your delta. And you can see right here where it says delta and theta. I don't know if I'm pronouncing that correctly, but delta and theta. So anyway, you look at your delta. The higher this number, like this contract that I'm looking at is the 440 put February 4th expiration. The delta on this is 0.40. So what that means basically it means that for every $1 move that the stock gives you, the underlying stock, whether it be SPY that I'm trading or Tesla or whatever stock that I'm trading, if the delta is 40 cents, that means that options contract is going to move 40 cents for every $1 that the stock moves. Now, in a put option, obviously you can see it says minus 0.40. So every time, if the SPY goes down, like right now it's 445.70, if it went down to 443.70, then right now your premium on this options contract is $6.50. So if the SPY went down $1, then that would add 40 cents to this option premium, which would make it at 6.90. So if you bought a put option, if you bought this put option at 6.50 and the SPY moves down $1, I'm sorry about those are my Benzinga notifications on there. But yeah, if the SPY moves down $1, then your premium on that option contract should move up to about 6.90. Now, that is, all other things the same, unchanged, right? Because there is other factors that affect your options, the premium on your options contracts, like the implied volatility, and all that other stuff. But the main thing is you want to choose a delta somewhere around 0.30 and up is a pretty good delta. Okay. Now, this is for a day trade. you know, for a day trade. If you're doing a swing trade, it's a totally different thing. But this is for a quick day trade. Like, I'm gonna enter this position and I'm gonna exit today, right? So, you know, and then the theta, that's it doesn't really affect too much on the day trades. So we're not gonna get too much into that. But basically, that's how much your options contract will decay. Your premium will decay by this much for every day that you keep holding that contract. Yeah, she's trying to break down. Let me see. I'm going to take a small position here because I don't want to go too big on this because I just don't know how much more downside we have today. I mean, I do think the markets go lower, but how much more downside do we have today? I mean, we could come down to this low of the day and do a double bottom and then bounce. Because there's going to be a lot of support right here at the 200 day. Well, looks like I missed my opportunity. Okay. Well, but anyway, so now we know we want a delta at least 0.30 or higher. You know, that's the better delta. Okay. Now, also, one other thing you got to keep in mind is, when does your contracts expire? When does your contracts expire? Let me see if I can mute. Shut that off. Okay. So when does your contracts expire? That has a lot to do with it. Like today is the 21st, January the 21st. Okay. So if you take same day expiration, then the only time you would take a same day expiration is if you're expecting a big flush, like, or a big move up or down, whichever way. If you're put options, you're expecting a big move down. If it's call options, you're expecting a big move up. The problem with that is, if you're wrong, and even if it just trades sideways, your options contract is going to expire worthless. And what that means is, let's just say, let's look at same day expiration on the SPY today, 121. And let's look at, let's just say somebody was wanting to go with a 440 put. Okay. And those are trading at 60 cents. They're cheap, right? Now, if the SPY does go down all the way to 440 and breaks the 440, it'll give you a big return. It'll give you a big reward. I mean, it's liable to give you a 200, 300% gain if it does that, if it breaks through that 440. But if it does not, then it's going to cost you 60 cents, 68 cents per contract. So if it does not, then you're going to lose that $68. If you buy more than one contract, then, I mean, you're still going to lose all that money if it goes sideways. Now, see, like this one right here, see, it's already moved from 60 cents to 80 cents. Okay. In a matter of seconds. So, I mean, you can trade when you have volatility, you can trade those same day expirations, but just know that, you know, if you don't get that move, just that's over 30% move just right there in a few seconds. But anyway, so try to stay away from same day expiration. In my opinion, I would say stay away from it. If you're doing a day trade, I would at least give myself, if you're expecting a lot of movement, I would at least give myself 2 to 3 days. So now let's look at and see if we was going to choose a put option 2 to 3 days out. Okay, so this one is 4 days out, which is Monday. Today's Friday. On a Friday, I like to take, I like to take at least 4 days, 5 days. So let's just go with that Monday, 4 days out. Okay. Now, let's look at the options chain. That's the first thing you got to do is look at that options chains so that you can select an options contract. Okay. And for some reason, I'll go back. Schwab has been acting up lately on my options chain. I had to do it a couple of times for it to go to where I wanted to be. But anyway, here we are, January 24th expiration. Now, 444 is where we're trading at, basically. So let's start there. 444 puts. Okay. Now, we've covered the delta. We've covered that. You can see the delta here is 0.50. So that's a good one right there. The next thing you want to look at is volume and open interest. You want to see high open interest and high volume. Ideally, I like to go with the one with the highest volume and the highest open interest. But as long as you have good volume, which the SPY generally gives you very good volume on most of the contracts. As you can see, this one, the 444 put trading at 380, has 30,000 in volume, 5,000 in open interest. So I would go with that one. That's a really good one to do a day trade on. Now, if you wanted to be more aggressive and go with the 440 strike, go up here, and you can see it still has, I mean, it has a lot of volume on this, 60,000 and open interest at 14K. That's good. Now, you can go and look at the 439 and you see the difference on that one. Volume is you know, it's okay. Open interest is low. I would not touch that. Plus the delta is at 30 compared to these other ones. So, you know, I would stay, in my opinion, on this one. I would go with a 444 put, or if you want to be aggressive, with a 440 strike on that. Now, like I said, the SPY, it gives you very good what's the word I'm looking for? Liquidity. It gives you very good liquidity on these contracts. Let's look at something like ZS, for example. And let me take these out. So now looking at ZS, if you wanted to short this, because it doesn't make its move up, and you know, more likely it's going to go down with the SPY. So let's look and see if we wanted to take some put options on ZS. Now, let's just say we wanted to do a day trade, okay? The low of the day here is around 244, and it's currently trading at 251. Okay, so let's look at January 28 put options, and let's start around in the money here, or at the money, I mean, at 252.50. Okay, these are trading at $10, around $10. Delta, very good, 0.49. But look at the open interest, just 10. Volume, 18. You can't trade that. You know, I mean, you're going to have a spread. You're going to have a big spread on that. And there's no volume. If you buy these, you're not going to have very many people to sell them to, you know. So you don't want to buy this. Now let's look at and say we wanted a cheap put option on this. So we have to go far out of the money to get a cheap put option. The low of the day is 244. So let's say we wanted to go, let's say we thought it's going to break 244 and go to 235. We could look at the 240 put option. It's a little bit better. You can see open interest 167, volumes 31. I do not like that volume. Delta is all right. I just don't like that volume. So you see, I mean, there's not much liquidity on these. It's hard to trade these when you have, you know, very low volume on them. On this particular one, I would probably go with a 245 put because it has good delta, better open interest and volume than any of these other ones. I mean, look, just browse through there. And what I do is, you know, choose your expiration date and look and see. like I said, in this case, this is the one with the most volume. So if I was going to choose this expiration date, that's the I would go. Just I just don't like it. I mean, it's a dollar spread on this, you know. So when you take this, you're going to be down $1 per contract as soon as you enter that position. So it's, you know, I would look at the other days, you know, look at the other expiration dates and see. Let's look at February 4 and see if there's any more, you know, better volume on those contracts. It just trades poorly. No volume on the February 4th. February 11. Let's get out of the weeklies. Go here. See. Now this one, a lot of open interest. Volume is not that great. 250 put option. If you wanted to go a little bit cheaper, you know, for a smaller account, you could go with a 220 put option. It's way out of the money, but you have more time on this, 29 days. Open interest, not that great, but, you know, volume is also not that great. But like I said, it's just there's not much liquidity on these, you know, so that's why I said, you know, just because you know the stock or you think the stock is going to go down doesn't necessarily mean, oh, I'll just go and grab a put option at whatever arbitrary number I can think of and take the trade. Because even if the stock does what you think it's going to do, guess what? It may not, that option contract may not pay. You know, you got to have volatility and you got to have liquidity on your options contracts. Okay. So that is basically what, you know, I look at it. Let's look at Tesla. See, Tesla tried to move with the SPY earlier, and now is just, oh man, I bet I'm done missed the SPY. Let's see, that 440 was looking at the 128, I believe. I don't remember what these were trading for earlier. Thought it was 650 if I'm not mistaken. But anyway, so when you're trading, you got to look for volume and open interest and your delta. And you see, also another thing to keep in mind is as the stock goes in your favor, if it's put options, as the stock goes down, the delta is also going to increase. Okay. So, because earlier this delta was at 40 cents, if I remember correctly. Now it's at 0.53. So now for every dollar move, it's going to move 53 cents in your contract. And remove every time that the spot or the underlying stock moves $1 in your favor, your premium, you know, you're going to be making $50 per contract because it's on a multiple of 100. You're leveraging 100 shares basically. So let's go back and look at the Tesla. A lot of people, you know, like let's just say you want to take a trade on Tesla and you want to do a put option, and it's currently at 960, and let's just say you think it's going to go to 950, okay, or lower. Again, if you went with same day expiration and you choose the 950, there's a lot of volume and a lot of open interest, and you can take that trade. It would cost you $5.70 per contract, which means that it would cost you $570 to enter this trade if you just bought one contract. Okay. Now, the problem again with this, as I said earlier, if Tesla just trade sideways, like let's just say, and let me take some of this off. Let's just say Tesla does this all day today. Okay. You're in the same day expiration. Let's just say you entered this trade at 570 because you were like, oh, look, it's going to break that low or whatever, or, and it's going to go to 900. Well, it's just going to chop all day. You can see now 570, it was earlier. Now it's 470. Okay, you just lost $1 in premium, $100 per contract. So let's just assume you entered with one contract and it trades sideways all day. Guess what's going to happen at the end of the day? This contract, as it gets closer and closer to the end of the day, this premium is gonna erode, and it's gonna go lower and lower and lower. And it doesn't matter if near the end of the day Tesla almost reaches 950. That premium is not going to be worth $5.70 anymore, because you're at the end of the day. The only way for that to happen is if it broke through 950 and gave you a so that's the problem with same day expirations. Okay, if it just trades sideways, at the end of the day, your contract is going to expire worthless, and you're not because one every okay. So that's why I try to stay away from same day expiration calls. You can do lotto calls. I mean, like if say you had a great day trading and you had good profits for the day, and you wanted to do a lotto call or a lotto put or whatever, with a very small size. I wouldn't do with $5. I wouldn't do it on a Tesla. I would do it maybe on a SPY, like those put options earlier that were for like 60 cents. You could do that, but it's not advisable. So just because it's cheap doesn't mean it's good. And just because it has volume doesn't mean it's good. Stay away from same day expiration, in my opinion. Now, if you wanted to do a swing, let's just say, let's go back to the SPY. Let's just say you thought that the SPY is going to hold this 200-day at the end of the day, and we're going to get a small push because, we have room to the upside. We have some room to the upside, and I do think we go higher either today or Monday. I think we'll have a great line or let's just say you thought you wanted to take a swing trade. For me, for swing trades, of course, not on enough time. Now with the SPY in this case, calls, let's say we thought it's going to make a move, but we want to have plenty of time. So I would say maybe go 2 weeks. So February 2, February 4. Yeah. Let's look at February 4. And we wanted to do a call option, and we're currently at 444. So let's just say we think it's going to go to 456. So we could do a 445 call or a 450. Interesting. Let's see. trade. I mean, if you move Monday or Tuesday, it would pay you very well. But if not, then it's not going to pay you that great. So I would say 50, a little bit lower volume, yes, but you know, you're closer. If you get the move that we're talking about, and your delta would increase. Increases in your favor. It's really kind of what you want to do. Let's just say, let me look at, let me look at WFC Wells Fargo. Let's just say I wanted to do a swing trade on this. And I had a position in this and sold out for a loss on the second trade. Looking at Wells Fargo here, I think if we come down to $52, I'm going to take another, I'm going to take another swing at it, take a swing and use $50 as my stop. You can see this was prior resistance. So, and then also here, prior resistance. So $50 should act as support. So if we retest $52 plus the 50 days around $50, yeah. So if we retest $52 on a pullback, I do think that this is going to be a good swing candidate. And these options are not that expensive. But if I was to do that on something like this, and this would be a multi-day swing, so I would be wanting to take enough time on this, at least 30 days. And you can see we got the closest one is February 18. So for swings on individual stocks, I would take at least 30 days out. So this would be the first choice that I would go to. And we're trading at 54, but if I take it around $52, $53 area on a pullback, then the $52, $53 calls would be at the money. And what I would expect would be a retest of these prior highs, close to $60. So the $55 call has very good open interest. You can see 20,000 open interest. So I would go with either one of these, the $55 call or the $52.50. The $52.50 would be more near the money whenever it does pull back to $52. So I would probably go with that one since it's not that expensive. I mean, it's trading at $285, $287. By the time it gets to down here, it's going to probably be under $2, if not like $1.50 or something like that. So, and the delta currently 66. It should be around 0.40 around that time. So it would be a very good options contract to take. And yeah, I'm going to make a note of this one. Let's see. I'm going to do it on the so I won't forget. And I'm also going to set an alert here. Going to give me plenty of time for that pullback to happen. Okay. I'm going to set an alert at 53 when it pulls back to 53. I'm also going to set a pullback to 250 just in case I miss one. You know, always set alerts. Uh, that constant. Uh, well, alerts remind you when that stock reaches that level. Let's go back and look. I can get a trade on that. Come on, why are you lagging? Okay, let's see if it rejects here from VWAP. And put options. Excuse me. I'm liking these 445 puts. 440s. No. So, oh yeah, the 440 has a lot of volume. Yeah, I might go with the 440s. Yeah. Good delta, open interest, and volume. Now these contracts are going to be $7. $7 per contract. Come on, give me another test of VWAP. Don't flush on me right now. You got to be kidding me. Okay. Come on. As you can see, we done moved 40 cents from that $7 entry. If we took that entry at $7, that's 40 cents. That's $40 per contract. Oh, these are going to pay. Oh, man. These are going to print. Okay. Well, I believe we missed that trade. So, yeah, that's basically what I wanted to cover on the options, on how to select an options contract. If you have more questions, uh, ask them in the comments, and I will try to get back to you on that. Um, there's not much moving today, so I figured I would go ahead and make that video. Let's see, probably going to take the day off so I do not end up chasing something and get profits back. I had a good day, close those put options, and I really don't want to give any profits back today. Looking at BBIG here, see if it's no, BBIG is done for. Yeah, I mean, unless they can hold that 50-day, I think it's done for. And it's really looking really bad right now. Anyway, let's see. Look at what was the other one? Pixie. A lot of chatter behind Pixie. Yeah, I'm not interested in that. What's the VIX doing? Okay. My size. Oh, there's not. Yeah, it's just, man. BDSI. A lot of resistance there at 350 on that 200-day. A lot of resistance. 350. You can see the 200-day right there. Then resistance area right there. Resistance. This was prior support, so it's going to be resistance if the stock's underneath it. Yeah, you can just go back and see, where that 350 level. I mean, it's just, yeah, that level is, I mean, as you go further and further back, you can see how that level is just, I mean, it's got to get over that level before it makes it move higher. I don't think it'll do much today. Look at RKDA. Ugh. Netflix. I think this goes down some more. Let's see. Yeah. See how she closes today. She could go up two and then start moving down again. We'll see. I got it on watch for some put options. Okay, let's see if there's anything else. I don't see anything worth trading. UVixie. Okay, RGD. Was having volume this morning? Nope. Not interested in that. RDX. Nope. RIGL, right? RIGL. Let's see. Man. Very low volume. Yeah, 250 level resistance there. I mean, intraday it looks okay. Yeah, I mean, could have entered right here around 238, 38.2 fib, lining up with VWAP. Stop somewhere below the initial morning high, but I just don't like it. It's look for something else. Okay, let's see. Done looked at all those. Where'd you go? There you go. Nope. Let's see how Piton is looking. I might have should have held on to the inputs. uh, 2. Take 2. Let's see. No, I don't think you have much. I don't think you have much more upside there. Okay, so let's look at these. See what's moving over here on the option chain. Let's see. D-Dog. Whew. No. Yeah, there's not anything I like. The only thing that might be in play would be SPY put options. Huh. Okay, I'm just gonna close it out here. I'll keep an eye on the SPY, see if I can get a entry on this, and we'll go from there. Like I said, if you have any more questions about the how to select an options contract, just post them in the comments. One more thing I'd like to add on that is if you're trading options, I would suggest you start on a simulator. Thinkorswim has a simulator where you can paper trade, and they have a thing called on demand where you can go into afternoons or whenever you have time to do so, and trade. Like you can go in there and say you can go and trade the SPY. Literally, you can start it at, even though markets are closed, you can go on the simulator and you can literally start at the opening bell on the SPY and just follow the chart and enter and exit wherever you feel like, to get to practice. And it'll be as if it was in real time. And so it's a very good platform that you can paper trade. Webull has a paper trading simulator as well, and E-Trade also has a paper trading simulator now. So, oh man, yeah, almost $1 move on those put options. Well, anyway, so I would look into any of those, and so you can start practicing before you go in with real money, because options, yeah, they can be great when they move in your favor, but they can also crush you if if you don't know what you're doing, or if you go in with too much size, or you hold on to them too long and don't take profits. So always remember that it's not like a stock. I mean, so I always remember that. But anyway, have a great rest of your day, and I hope y'all profit on something today. Like I said, there's not much moving out there. So I'm just going to probably take the rest of the day off. We'll be watching the SPY to see if I can get another entry. Another entry opportunity would probably be on the break of the low of the day. It's a little bit more aggressive trade. What I would like to see is it break the low of the day, come back and retest it, and then flush. But I'm afraid that once it breaks the low of the day, it's just going to flush. So we probably won't get that. But anyway, as I said, have a great rest of your day. And yeah, talk to y'all later.